Earlier this year, both coffee and cocoa markets saw spectacular price surges, the kind that capture global headlines. But what was driving them? Were fundamentals truly that tight, or were speculative forces at play? To break it down, I'm joined by two StoneX Brazil market intelligence analysts, Fernando Maximiliano on coffee and Lucca Bezzon on cocoa, for a closer look at the recent run-up in prices and what it tells us about the months ahead. Welcome back, both. So let's start with what drove the spectacular rise in both markets. Should we start with you, Lucca?
Yes, definitely, Fiona. Particularly speaking about the cocoa sector, the biggest bullish factor that put prices in another level during 2024 specifically came from the supply side, which which was caused by the significant decrease in cocoa production in the two biggest producing countries, Ivory Coast and Ghana. Together, these countries account for nearly 60% of cocoa production globally. And these countries have suffered over the last seasons with irregular weather patterns, especially during 2023, the aging of trees, and the structural difficulties which have reduced the capability of farmers to invest in their own cocoa trees. In turn, this scenario caused the global cocoa balance to register three consecutive harvests of deficit in the relation between supply and demand, which in turn reduced the level of global stocks to the lowest levels in over 50 years. This, of course, caused the fundamentals and the price perception of cocoa to rise and impacted primarily the cocoa futures during the year of 2024, with the historical peak reaching the highest level in December of the same year.
And Fernando, the same question to you.
Hi, Fiona. Yeah, so coffee market has been facing several weather challenges throughout the past 5 years. We saw since 2020, almost 3 years in a row of La Nina. Since then we saw almost every year at certain level drought in Brazil, and that was very crucial. We had frost in 2021. We had El Nino in 2023. We had a drought in 2024 in Brazil as well. So we also had weather issues outside Brazil. I'm talking about Brazil because the Brazil has in the global supply, but we have Vietnam that suffered a lot as well because of the weather issues, mainly the El Nino effect, which caused drought in the Asian country. So coffee production has been facing several challenges, which brought the production down. And as a result, we saw global demand surpassing production for 4 years in a row. So since 2021 and 2024, we consumed more than 22 million bags out of global stocks. And that was one of the factors that drove prices to the highest level we saw in the first quarter of 2025, Fiona.
And was this run-up justified then by fundamentals, or did speculation play a bigger role? Lucca, what's your take on that?
Well, it is certainly clear to everyone that market fundamentals were the main drivers behind the price surge in 2024. However, specifically when we talk about the supply side, but at the same time, the characteristics of the futures market also played a significant role in the historical volatility observed in recent months. One of the most evident signs of speculation in the cocoa market is the sharp reduction in the number of open contracts on the exchange. After the historic price rally, many participants of the market exited it due to higher margins and the elevated prices, which made it harder for companies and commercial users to use futures as a hedging tool. As a result, speculative players such as hedge funds and other investors gained greater influence, attracted by the high volatility of cocoa prices. This shift occasionally led to a disconnect between market fundamentals and prices over the past few months, which varied a lot during moments of the commodity price movements. But we've definitely seen some sessions that there were a disconnection between fundamentals and what the futures market saw.
And in the case of coffee, Fernando?
Yeah, for coffee, we saw similar condition regarding the increase of initial margins and the challenges regarding the volatility that the market has given to players. But we saw the speculative players play an important role, participating in the market and taking advantage of the volatility caused by the fundamentals, which I agree was the main driver, and everybody was looking at it, following. But there was, yes, an important role of those players in the market.
And how have end users and industries reacted to these extreme prices? What are you seeing, Lucca?
Right. On the demand side, I think the most significant impact of the higher prices so far has been seen on cocoa processing worldwide. The term processing, also referred as grinding for between market participants, is closely linked to what the market associates with cocoa demand, as these industries convert raw beans into subproducts that will later be used by confectionery manufacturers and ultimately sold to consumers. So for now, the clearest impact on demand has been a decline in processing activity, likely reflecting the reduced demand from the confectionery companies. This trend suggests that their profit margins have narrowed, which in turn made confectionery companies substitute cocoa products with other products and fats. In terms of number, over the last 2 quarters, considering the regions that we as the StoneX Market Intelligence cover, we've seen that on the regions that we cover, there were a decrease of between 8.9 and 12.9 percent respectively during the third and second quarter of this year compared to the same period of the previous year. So it's a significant decline in the processing activity.
And Fernando, with coffee?
Well, it had a major impact on the industry and on the at the consumer level as well. So we saw the industries having to face this condition, which is very challenging. So the steep increase in prices is something that weighs on the operation, and they had to pass that on to the consumers. So we saw inflation on roast and ground coffee to increase as well. For example, in the United States, the inflation went over 40%. If until August, if we compare the year-on-year change. In Brazil, we saw inflation going above 80% at the consumer level. We saw it decreasing a little bit between May and July, but it is still above 60%. And in Europe, we saw inflation rising above 20%. So the industry had to pass the part of the increase to the consumer, but it's also losing part of the margin. And at the consumer level, we saw because of the inflation, lower consumption as well. For example, Brazil, from ABIC, there are reports of a 5.4% decrease in retail sales. We have data showing more than 3% decrease in consumption in Japan, for example, and we have some other indications pointing to a similar direction in the US and Europe. So for sure, this increase in prices impacted the industry and the consumer, the final consumer.
So we've seen what sparked the rally and how different fundamentals shape these two markets. In our next episode, we'll step back in time in the 1970s. We'll see why this decade remains a benchmark for these markets and what lesson this period still holds for investors today.